today the United States has a GDP of approximately $20 trillion. Of that amount, we, the consumer, are 70%. Industrial activity is about 12, municipal and government is the balance, and then you subtract or add exports. $350 to $400 billion is a negative trade with China. So along comes a real estate guy in New York who's used to dealing with tough situations, and he says, look, we can't live this way. It's intellectual property, it's subtracting 2%, and we're giving $400 billion a year to China. So, work in progress. And that has a negative implication for global growth. It is an element that every day you come into the market, you look at and say, you know, this is like the times we were drawing for Vietnam, the market goes up and down, or M3. Then the second one is the 10-year bond. The 10-year bond in October 1st, 2018 was 3.2% going to 5. The present value of future stream of earnings was going to be hurt. The market took a nasty tumble in the fourth quarter because there was the expectation of a recession. Today it's 157. The guy in Europe was on his way out. Mario Draghi just slashed everything in Europe, and that's an impact. And what does that mean? Does this supply a support? Does this provide a support for stocks? And then more importantly, what are you going to do with your portfolios? What kind of returns do you want to get? How much volatility do you want? You have an endowment. How do you handle that? And if you have a pension plan and you got defined benefits and the or defined pension, how do you fund that? And obviously, technology is fantastic. You know, if you were here in 1910, we talk about Henry Ford, the assembly line. We talk about the steam locomotive. Today, it's the digital revolution that's changing the social world. You heard about that from Freelander. He said, e-commerce, Amazon. My wife won't buy anything without shopping on checking price. You won't even go to Costco without checking price. I mean, you know, and we're loaded up with toilet paper.